Good morning, students. How are you all? Hope you all are fine and you are attending the classes also, most of you. Okay, I am very glad. Okay, then 12 lessons are included for the half-yearly examination. So, the 12th lesson I have started, around 3 more classes available. I will complete. Here, 3 accounts are there. One trading account, the next one profit and loss account, third one balance sheet. Okay, each day I will complete one. Okay, so today we will learn about the trading account. So what is a trading account? We, in short, trading means what? Purchasing and selling, isn't it? So we know, we compare the sales with the purchases. We know purchase means the goods bought for resale, isn't it? So here we need to deduct the purchase return also, isn't it? Purchase returns must be deducted from the total purchases. So we have to take the net purchases. The sales also, minus sales returns, we will take the net sales. Okay, then here that opening stock we have to take. What is opening stock? The stock which was unsold in the last year. The last year's closing stock only will become the opening stock. Okay, so this is the first item, two opening stock. It is having 2 pages. Okay, 2 pages you have to use. Okay, 2 opening stock, then 2 purchases less purchase returns. Okay, then we need to add the expenses. Here the direct expenses we have to take. Okay, so here 2 pages you have to use, left side, right side. Okay, here direct expenses means all the expenses related to the purchase of goods. Okay, not selling of goods, only purchase of goods. Then office expense, administration expense, selling expense should not take. Only the manufacturing expense or the purchases expenses with regard to the purchase of goods and bringing the goods to the factory or and till it is getting ready for the sale. Okay, all those expenses. Example, we can say wages. Okay, that wages means the that amount that we pay for the workers, those who are working in the factory. Wages. Then that carriage inward, or freight inward. Freight inward. Here if we bring in the truck, okay, the goods, that is called carriage inward. But if we bring the goods in the train, that is called freight. Okay, freight. Then if the goods are imported from foreign countries, some other charges, that is dock charges. Okay, then import duty, or the duty that we give for importing those goods. Okay, then that some goods if we bring into the municipal area, for that we have to pay one amount. Okay, that is called octroi. To bring the goods into the locality of the municipal, okay, municipal locality, they have to pay one tax, that is called octroi duty. Then all the other things, that coal, gas, light, that means light we can say power, fuel to run the machine. Okay, all these that is used in the factory to produce those goods, all these are the direct expenses. Okay, then on the credit side, on the right side of the page, we need to write the sales, by sales. Then we need to deduct the sales returns. then by closing stock. Okay, closing stock means the goods unsold. Okay, goods unsold at the end of the uh, accounting year, that we have to deduct. That's why we are writing on the closing, that credit side. If in a statement way also we can find out. Okay, here we have to calculate the cost of goods sold. What is the cost of goods sold? If we deduct this cost of goods sold from the sales, net sales, we can find out the profit. Okay, so first we need to find out the cost of goods sold. For that, we can take opening stock, add purchases. Purchases means net purchases. Okay, then add all the direct expenses. Then we need to deduct the closing stock. Okay, we will get the cost of goods sold. Then from the that is sales, if we deduct the cost of goods sold, we will get the profit. This profit is called gross profit. This profit is called gross profit. This profit will be here, it will come here. Okay, to gross profit. This profit will be taken to the next year by gross profit. That account is called profit and loss account. Okay, now we will do some of the problems. Okay, from that exercise. Okay, first one. Here we should use 2 pages. So I am using 1 page only. Okay, I am using 1 page only. Okay, how you take the first exercise. Prepare trading account in the books of Mr. Sanjay for the year ended 31st December 2017. Opening stock, sales, sales returns, purchases, purchase returns, closing stock. So first we will write the number. Okay, number 1. Then write the heading. Heading in the books of Mr. Sanjay. That is the first line. Okay, in the books of Mr. Sanjay. Then next one, trading account for the year ended. That is given in the problem. Okay, you have to write like this. For the year ended 31st December 2017. It starts with what is the first item? To opening stock. Here to, this is the right side page, this is left side page. Okay, you use both the pages. To opening stock. Here to amount column will be there. Okay, for you to amount column will be there. To opening stock 570. Okay, then to purchases, you write fully. Okay, this one you write within that in that inner column, because we have purchase returns that might be deducted, less purchase returns 90. So 15,710. Okay, then any expenses? No expenses, isn't it? So by sales, because sales returns given, so you write within the inner column 26,200. Then less sales returns 60. So 20 in this 60 you have to write. Okay, straight to 60 in the same line. 26,140. Okay, then the last item is by closing stock 860. Now we need to balance this account. Okay, here only more. So you write that amount 0, add and write. Okay, 9 plus 1 10 7 27,000. That same amount you write here 27,000. Now write to gross profit, carry down. Okay, balance and write 7 8 2 10, balance 1 6 13 13 plus 7 20, balance 1, balance 2 7 0 1. So 10,720. This is the answer. Okay, trading account. Then second problem. Here you have to write the number first. Okay, number 2. Here we will write the heading. Okay, in the books of. Okay, then trading account you write fully. Okay, for the year ended 31st December 2017. Okay, so here first item is to opening stock 1,50,000. There will not be any adjustment. Okay, then purchases, what is given? Net purchases, to net purchases 1,50,000. No need to adjust. Then what we have to write? Expenses, direct expenses given. Yes, direct expenses 8,000. Then by sales, what is sales given? Net sales 4 lakh. Okay, then by closing stock 25,000. Easy one. Okay, so we will add credit side only more 4 lakh 25,000. If net sales is more, we will get profit. Okay, but sale is less, we will get this side balance, then loss by gross loss. Okay, here we have got more on the credit side. So write the same amount 4,25,000. Then write as to gross profit, carry down. Okay, balance and write 305 here, isn't it? 8 there. So 8 plus 7 15, balance 1 11, 11 plus 1 12, balance 1 2 3 plus 1 4. Okay, so 1,17,000 is the answer. Okay, in the same way we will do the next problem. Third one. Number 3. In the books of, not given. Okay, so in the books of, write dash. Then trading account for the year ended 31st March 2018. Up to that you write. Okay, then you have to divide the page into 2. Okay, first item to opening stock. Okay, the last second column you write 2,500. Then to purchases. First you check any purchase returns. Okay, purchase return. Here 2 returns given. One is return outward, one is return inward. What is purchase return? Return outward only, purchase return. So we have to write inner column purchases 27,000 less return outward 5,200. Okay, right. 0, 0, 8, 6 minus 5, 1, 1. 11,800. Then any direct expenses, check. Wages given, isn't it? So first you write wages, 2,500. Then return outward we have written. Then coal and gas we have studied, isn't it? Coal and gas direct expenses, 3,300. Then carriage inward, 2,600. Then okay, all the expenses we have written. Now credit side, by sales. Here we have sales returns also. You write inner column. Okay, sales 40,000 less return inward. Okay, 7,000. So 33,000. Okay, then by closing stock, 5,200. Now we will balance this one. Okay, here 38,000, here less only, isn't it? So we will add 38,200. Same amount you write here also, 38,200. Then 2 gross profit carry down. Okay, add here 5, 13, 18, 21, 27. 27 plus 5, 32. Balance 3, 5, 8, 10, 11, 13. 13 plus 5, 18. Balance 1. 1 plus 1, 2. 2 plus 1, 3. Okay. Correct. Here 21,000. So this will not come. Okay. Then fourth exercise. Next exercise number 4. Okay, we will write 4. Okay, here we will read that here first item you see adjusted purchases given. Then sales, royalty on purchase of goods, octroi on purchase of goods, cost of goods manufactured, closing stock, carriage inward, import duty on purchase of goods, dock charges on purchases. So almost all expenses, direct expenses only, isn't it? Here, what is this adjusted purchases means? Here, opening stock add purchases less closing stock is called adjusted purchases. Okay. From that, if we deduct the direct expense, we will get the cost of goods sold. So, if they give the adjusted purchases, we should not take the closing stock. Okay, so first we will start doing in the books of then trading account for the year ended 31st December 2017. Okay, first 2 opening stock we should not write first item itself, net adjusted purchases. Okay, 80,000. Opening stock and closing stock will not come. Okay, adjusted purchases. Then all the direct expenses. Here royalty on purchase of goods, so it will come. Okay, 4,000. Then octroi This also on purchase only, so it will appear. On selling of goods means it will not appear. Okay. Then 2, cost of goods manufactured, 5,000. Then carriage inward, 3,000. Then import duty, 6,000. Dock charges, 5,000. All direct expenses. Here by sales. Okay, sales 90,000. Closing stock we should not take. This closing stock will appear only in the balance sheet. Okay, what is given there. So see here 90,000, but here more, isn't it? 84, 89, it is more. So this side is more. So we will add this side. Okay, 0, 0, 0, 11, 14, 19, 21, 25, balance 2, 10, 1,05,000. Write the same amount, 1,05,000. So you write the balance amount by gross loss carry down. Okay, 0, 0, 0, 5, 9 plus 1, 10. Okay, so 15,000 is the loss. You have understood now? Now, next one, number 5. Compute cost of goods sold from the following information. Okay, here, fifth one. Computation of cost of goods sold. Okay, cost of goods sold is equal to, you have to write the formula. Okay, cost of goods sold. Opening stock, add purchases, that means net purchases. Okay, add direct expense minus closing stock. Okay, here what is given? Opening stock 10,000. Purchases, only one purchases, isn't it? 80,000. Then direct expenses, both given, direct expenses and indirect expenses. Here we should take only the direct expenses. Okay, 7,000. The indirect expenses will not come. Okay, just to confuse you, they have given that item. Okay, but you have to just leave that item. Direct expenses 7,000 minus closing stock. Closing stock is 15,000. Okay, how much? 80, 90, 97. 97,000 minus 15,000. 7 minus 5, 2. 9 minus 1, 8. So, cost of goods sold is rupees. Okay, symbol you can write. Okay, rupees 82,000. Okay. Now, the 6th problem we will do. Here, find out the amount of sales from the following information they have given. What is given? Opening stock, closing stock, purchase less return, gross profit, margin given. Gross profit percentage is given on sale. We have to calculate the sales. Okay. Here, what is the formula to find out the sales? Cost of goods sold plus gross profit is called sales. Okay. So, what is the cost of goods sold? Opening stock, add purchases less closing stock. Okay. we will calculate cost of goods sold, opening stock, add purchases, no direct expenses here, isn't it? So closing stock, what is opening stock? 30,000 plus purchases 2 lakh minus closing stock 20,000. 23 2 lakh 30,000 minus 20,000 2 lakh 10,000. Okay, here you see cost, one formula is there. Sales is equal to cost of goods sold plus gross profit. Okay, here what is the cost of goods sold? So here we can calculate we need to calculate the sales, isn't it? What is given? Cost of goods sold only we have calculated, isn't it? 2,10,000. So here we have to consider this formula. Here if sales is 100, okay, gross profit margin on sales 30%. So here cost of goods, gross profit is given 30% on sale. 30% on 100 means how much? 30, isn't it? 30% on 100, 30. So how much is this one? 700, only 70. Then only we will get 100, isn't it? So now this cost of goods sold we know, isn't it? So this 70 is how much? 2,10,000. Then we need to calculate the sales. 100 is how much, isn't it? If cost of goods sold is 70, so 70 is 2,10,000. Then how much is sales? Okay, profit they have given percentage. So this one simplify, 1 0, then 7, 3 7s are 21, 3 1 4 0 5 0. Okay, 3 lakh rupees is the sales. Okay, like this you have to do. Okay, you have understood? The cost of goods sold is, if it is, you see 20% on sales means, so okay, 20% on 100, 20, isn't it? Plus 80 we will get. Okay, then we need to calculate. If this one is 80, how much is 100? Okay, we need to calculate. This also we can calculate. If 70 is this much, how much is 30? We will get how much? 90,000. As working we can do, isn't it? If this also we can see the amount, isn't it? You see 70 is 2,10,000. How much is for 30? 0, 7, 3. 30,000 into 3, 90,000. Now you see, if we add this 2,10,000, this is 2,10,000, isn't it? Plus here 90,000. How much we will get? 3 lakh, isn't it? So that we can calculate. Okay, students. So I have completed 6 problems. Okay, the next one, profit and loss account. Here 2 more periods we have. In those 2 periods I will complete this profit and loss account one day, another one balance sheet on another day. With that I will complete the portion. So you try to do these problems in your notebook. Okay, thank you students very much.